Since the financial crisis, risk management has become trendy, fashionable even, not just on Wall Street, but in Washington too. The CEOs say they've got their traders under control. Regulators want the world to believe they can prevent the next market meltdown. But has anyone here really learned a lesson? We're about to find out from a pioneer of risk management. Till Guldimann led the team at JP Morgan that developed the value at risk model back in the 1980s. He's currently vice chairman of SunGard, one of the leading software and IT suppliers. Till, it's the obvious question. Did Wall Street learn its lesson? Did the regulators learn their lesson? Are we doing a better job now of managing risk than we were before the financial crisis?
Erik, I think everybody learned a lesson. You always learn, hopefully, from your mistakes. So everybody improved, everybody learned not to do the same mistakes twice.
Okay, but repeating the same mistakes isn't necessarily the way to prevent the next crisis.
Absolutely.
Are we doing a better job of measuring risks? Do we understand what the risks are? And are we managing them in such a way that we will do a better job of preventing the next crisis?
You never fully understand what the risks are. We're always kind of in a haze. The question is, how much risk do you want to take for the returns you want to get?
Excellent point. So in that context, is risk management being taken seriously enough? Do people understand what they're getting into when they take the risks they perceive they're taking?
I think that's the key point, taking it seriously. I think with the attention that we have seen from the shareholders, from the regulators, from management, there's definitely more seriousness about risk management today than there was a year or two ago.
Okay, seriousness on the basis of what they say, but how do we really know? How do we know from the outside who is managing risk well and who is managing risk poorly until it's way too late?
I think it's important to make mistakes, but you'd like to have these mistakes small rather than large, because you learn from mistakes. So you'd like to have lots of small learning experiences. So the best way to know whether you actually have good risk management is when you see small mistakes.
So we should see failures.
Absolutely.
Just not big failures.
Absolutely.
But we have seen big failures over and over and over again. Risk-taking behavior should have changed, right? After long-term capital management, but it didn't. So why should anybody want to believe, or even be prepared to believe, that risk-taking behavior is going to change now?
I think we had such a big mistake, such a wake-up call, that it really shook the industry in its foundation, and everybody kind of focused now on making it better. So,
Till, if you look around you, where do you see the biggest risks to the financial system and perhaps by extension to the global economy?
I think the biggest risks is probably complacency again, which will set in 2 or 3 years when we don't have another really big one. It's like when you travel on the highway and you see an accident, you slow down, and then after an hour or so, you're right back up to your speed limit or above.
Can the markets police themselves, or do we need to have regulators?
You need regulators, not necessarily to prevent failures. You need regulators to set the rules of the market, and you need regulators to make sure that you have no catastrophic failures.
Okay, quickly though, because we're going to a commercial break in a moment. Much of the reform efforts have focused on giving the regulators the power to identify and contain risk. Can they do that?
I think they can do that, yes. It's an evolving craft to do it. It's not just finding the solution and then having it and it's good forever. So you continuously evolve the way you do that. I think the problem is that we might want to think that we can solve it once and for all, and we can prevent failures at all. We want to prevent the big failures.
You want to prevent the big failures, but it's dangerous to believe that you can prevent all failures. Till, it's a pleasure having you here on the Inside Track. Love to have you back. Till Guldimann, folks, of SunGard. He was one of the folks who developed, in fact, he led the team that developed value at risk, one of the key measures for risk on Wall Street.